Boom. We are alive, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bear. Bitcoin and cryptocurrency bottom. That's what we're going to be taking a look at today. There's a few ideas we're going to go over. We're going to look at Bitcoin. We're going to look at Ethereum. We're going to look at the S&P 500. We're actually going to make a comparison between these. And we're going to go over a little bit of technicals that I thought was an interesting story, especially for those of you that are fans of our scale invariant terminology. So with that in mind, let's just dive right in. So what we have right now is Bitcoin. Okay, so this is actually one of the long-standing charts that we've been watching for the last what is this? Almost 2 years now. God, that time just flies by fast, hey? It's a very pretty marked up chart, so we're going to go over this kind of step by step. So first off, let's start back where we were in March of 2020. So you can go back and look at all my videos. There was this moment between March, April, May, June, July, where we were super excited because we could tell the bull market was starting. This was this area around where you can see the word test written. Now, right now, as I've mentioned for almost over a year and a half now, is we are basically in the middle of the market. And the risk to reward relationship of the market right now is basically even, right? When we were back here in March, April, May, June, July, August, the risk to reward relationship was much higher in the reward side. Here, the risk side was very even. And this is why we kept mentioning that if you are a new investor, if you are new to this sector, one of the most important things that you can do is focus on a strategy that is repeatable. Can we have a bit more volume? Okay, yeah, I can do that. Let's go with this. Okay, that should be a little bit better. Okay, so what's a repeatable strategy? Well, price moves all the time. And effectively, the price movement is really almost designed to just get rid of the average person, right? So most people show up to the market and they don't have enough money to play. So they show up to the market thinking, hey, this is going to be how I make my fortune. And although you can make fortunes from the crypto sector and investing, your best bet is to start just like you would any journey of learning and take an approach that has a multiple year time horizon in its frames. Now, the growth of this sector has been phenomenal again. So if you did join us in the early parts of this test when we were around $9,000 to the all-time high, you're looking at almost a 14x, right? Here we go from at 600% from $9,000. Now, again, this is what's interesting is that if you look at Michael Saylor's strategy, he was buying here at 10,000 and again at 20,000 and again at 30,000. And he bought here a few times too at 60,000. And he bought here again at 40,000. He bought here again at 60,000. And he bought again at 49,000. And now he has a rounded price of around $32,000. See, this is so important to understand. You don't want to do what the poor people are doing. You want to do what the rich people are doing. The people that are rich have gotten that way because they follow a set strategy and rules by that, which is that assets are more valuable than the liability of holding on to a dollar. Now, again, this is hard for most. I think the book Rich Dad, Poor Dad is another great way to look at some of these ideals, because you can take loans out against your collateral. You don't have to sell your assets for them to be productive for you. And in fact, this is a great tax strategy for those of you that are in the United States. I'm not a United States citizen. So what does this mean? Well, it brought us to a kind of a fun side point. And what I love about the scientific discussion, not that technicals are scientific, but what I love about these discussions is that if you find 2 people, 3 people, 4 people that are climbing the mountain and taking different paths to that top of the mountain, but yet end up in the same place based off of their, let's say, mountaineering skills. I forget what it's called when you use a compass. I'm sure there's a specific name for it. But right now what you're looking at is Bitcoin on the top in blue and the S&P 500 on the bottom in red. Now, we've actually looked at this S&P 500 trading range many times before. And the reason we use this trading range specifically, this red one at the bottom, is because this was a multiple year time frame. So this was between the years of 1997 in the years of 2012 before we broke out of this trading range. Now, what's interesting here is that ultimately the vast majority of people would think that this was the top here, Bitcoin 65,000, before we come back down to create a secondary test of the trading range. Now, do we see a spring? This is one of the most interesting parts about the horizontal trading range, and it's something that we had pointed out many times before when we were looking at Bitcoin when we were on this chart. Now, we had drawn this chart. Actually, did I delete them all? I must have deleted them all. Okay. Well, for those of you that will remember, we have been following what we thought was a nice horizontal trading range. just like this. Now, part of the question was, is it a reaccumulation after decline? Which is that, was this the bottom, and does this create the SOS and LPS and then a higher format? And now the comparison between these two looks almost perfect. And a few of you I'm sure will ask, well, hey, Tiho, why is the time frame for the S&P 500 so much larger than that of Bitcoin? And does that make any difference? This is a great question. And for those of you that probably already know my answer to this, if you've been watching the show for quite some time, look up the term scale invariant. It is a mathematical function and a really important part of understanding the fractal nature of all markets, that you are going to see similarities at every time frame. And just like mountains, the peaks, the ranges, the valleys, the highs and the lows are created from fractals. So when you see repeating patterns like this, it is the nature of human psychology to create these patterns in the price of an asset that people are interested in. Now, the S&P 500 is an aggregate of assets, so it represented the top performing companies in the United States, and a very, very powerful sentiment to boot, right? This is not a small group of people that are interested in the S&P 500. So what does this mean? To me, I think we were at the bottom. Again, I still think that there's a potential for a spring like we saw back here that could wick into the $20,000 area. And just for fun and conjecture's sake too, there's two real main potentials here. Now, number one is, I think what we're witnessing is that we're going to see a trading range very, very similar to the S&P 500. And if you take a look at what the S&P 500 did afterwards, which we'll go and take a look at now. So let's go to the 3-day chart on the S&P 500. Dingadungle. Here we are. Okay, now this green trading range. So we've been looking at this for months, actually almost an entire year. We've had this green trading range around the S&P 500 because we thought this was a perfect example of a multi-year trading range, which included what people thought were two bear markets and what to do within this trading range, right? So let's imagine over the last 10 or 20 years, you've been trying to get assets, and most people think, oh my God, I got to buy here and sell here. And that's an extraordinarily difficult thing to do. And what real big money and what you should do to also acquire real big money is follow the same strategy, which is just, they're like, I'm going to buy here, 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 I'm going to here, right? You do that over the course of 10 years, and what you end up with is this really nice average price around the middle of the market. And this is what so few people understand about investing, is that ultimately the long-term time frame is up. They're destroying the currency. We know that. That's why Bitcoin is such an interesting part. But what's so fun is that this double top here is very deceiving. Most people would think that this is the end of the market cycle. When you look at Bitcoin, it'd be very easy to create conjecture that this was a double top and that this is the end of the market. Now, the other thing I want to go over too, which I thought was a really kind of fun sentiment, is that when you're learning, ladies and gentlemen, if you're new here, don't rush anything. It takes years, it takes decades to figure out where we are in the markets. And it's not actually even that valuable. If you understand the fundamentals, really just figuring out which is a good asset is way more valuable. This is why we focus on Bitcoin as our guiding light, and we use venture capital as our tertiary interest in investing in the future, right? Bitcoin has been at the top of my portfolio since 2017. Yeah, since 2017, where it quickly overtook everything else that I had. But it didn't start that way. And it didn't start that way because I found what I thought to be the interesting and valuable part of Bitcoin, which is sovereign free choice money. Pretty simple concept at its basis, yet extraordinarily valuable. And I needed no charts to understand that. Right? So there are two ways to look at things that are super important. Is this a fundamental or is this a technical valuable? And this to me is both. Right now, I believe we're seeing both. A, the fundamentals of Bitcoin are amazing, and B, I think we're seeing technicals. First off, look at the amount of volume that has come in here for this test and this spring. This is great. And you actually see a diminished, here we go. Yeah, so you see this rising increase in supply and signature, and as we get to the very last candle here, and this massive amount of supply coming into the market here, this is absorption. This candle, this supply in, and this candle being this distance compared to the previous much deeper distance. This is the change of character that we are looking for. And this is where I think the bottom is. Somewhere between, let's say, 34, and you could even see as low as $24,000 to $20,000 in like a fucking wick. But this will not last long. let's say it did. Let's say it did last long. Let's say we come down to 16,000, we jump back down to 24, up to 26, up to 32, and then we go up. Either way, this isn't going to last long. One of the most interesting things about Bitcoin is that because I've been here for so long, I've had the journey of being the total lunatic who is buying internet money to now there being one of the, or like to the largest investors showing up and being like, hey, this stuff is awesome. And that's such a big change to go through from being the crazy people to then being the justified who found what was valuable before everybody else. I think it's one of the hardest parts about being right and being early is that you have to be able to catalyze and foment your strength to commit to these large-term asset acquisitions over a long period of time. So as you can see, the light behind me is actually green right now. And we haven't turned this green light on for quite some time. And that's because I believe we're about to go bullish. Now, the reason it was off for the last month or two, we've been focusing mostly on venture capital because I believe the upside is so powerful there for everyone. I'm just trying to fix something here on my... Oh, well, I'm going to have to do it by hand, it looks like. Okay, so because of this, we want to focus on that long-term fundamental investment and use technicals to increase our confidence about that fundamental, not the other way around. Now, we've made trades in the past, like with 1inch, where it was purely a technical trade. And after having done that, I realized it just wasn't worth it. Although it did make, like, I think it was like $120,000 from that trade. It's not as valuable or as fun to me as finding early assets at open market price and acquiring them. And whether Bitcoin's at 30,000, 20,000, 12,000, or 100,000, its fundamental value is still probably higher than that. So this is why we always kind of repeat this story, is I think it's so important. People get washed out of the markets and end up on kind of nonsense for no reason. So there's the two things I want to keep comparing here is the next step, which I thought was interesting. Now, someone shared this in the private group. I thought it was a great little, and this is one of the fun things about learning is we're always learning. There's so much stuff. So this is a big shout out to George Lindsay for the peaks and a domed house. And these go both ways. So this is your 3 peaks and your domed house. And then you have on the bottom side of this, the domed house and the 3 peaks. And I want to actually make a comparison here for a few of these charts because I think we've actually seen this multiple times. Now, Bitcoin here, maybe it was Crypto. There's a few other people that were talking about this too during that breakdown, which is, okay, well, here's points 10, 11, 12. Here's points 15 through 20 right here. And then here's the top of your house, the 23 right here. And this actually looks like the top of a trading range too as well, by the way. So what does this mean? I believe we're at the bottom. I believe we hit the bottom, and I believe what we're doing is we're making basically a version of this, what appears to be a double top. And I think that this is designed to, again, get rid of most people. Yeah, that's one of the hardest parts, is that understanding these signatures where you have something that looks like a double top is, again, this is big money trying to shake out weak hands so that when the time comes, they can drive the price higher. And again, if you look at the comparability here, look at where the S&P 500 is now. Let's scroll this back. We'll put the S&P 500 into screen here. So here's what it would look like if you continue to go up this angle. Here's Bitcoin again at the top in blue. And so when you have multiple different people coming to the same point in the mountain, so for instance, I saw one of my really good friends, Nicholas Merton from Data Dash. He was also looking at this. Again, we've been looking at this accumulation channel in the S&P 500. I've brought up almost every week for a long time. Not that I thought that they were going to actually equate to the same movement, but here, again, you can see that might actually well be the case. And afterwards, Bitcoin or the S&P 500 has gone on a multi-year run. Basically, since 2011, the S&P 500 has only gone up. This is why a lot of people are worried about it. But let's take another comparison here. Where do we find more of these 3 peaks in a domed house, and what happens during that process? So this is one of the other fun things, is that the domed house and the 3 peaks all end back at around point 10, which is this point here, this secondary area of support. So effectively here, right? So what's fun is that if we use the S&P 500 and we kind of continue out this pathway, let's use, there's a few of them here as well, by the way. This is one of the things I love about scale and variance, is that you get a repeating process. Okay, So here you go. This actually to me looks like the three dome, yeah, so the three peaks, boom, boom, boom. There's number dropped to 10. Here's the run up again, all the way to 23, all the way up to 23. And then what does it do? It returns back down to this area, right? Okay, so up all the way back down to this secondary pattern. Now, nothing is perfect in the markets. So let's ask ourselves, is there areas where we could have been easily deceived by this? And yes, in fact, there is. Look at this. Here's a reaccumulation channel, which looks like one of those triple boom, boom, boom tops, followed by this kind of peaked out house. And look what it does here. It comes all the way back down. So let's make some conjecture. Is this the three peaks? 1, 2, 3, effectively here. And then is this the domed house? And then look what it does. It returns right back down to this area. So this is one of the fun things about fractal or scale invariance, is that these patterns and shapes do not have to fit exactly. It's like climbing a mountain. You're not going to get the exact same mountain when you go to a different range. You're going to get a variation of those ranges, and that the fractal nature of the entire universe. So here, again, what's so unique is that this three-peak dome house, or domed house three-peak, however you want to look at it, actually shows up quite frequently. So where else can we find it? Boom, let's jump into one of our favorite alternative assets. Let's take a look at Avalanche. So we'll go down to Avalanche on the daily. We'll start to make some conjecture here. Okay, and actually I believe that this was the opposite of the three peaks in the domed house, and that this was a domed house into the three peaks. So let's make another comparison here. So you've got the 10 through 12, or 10, 12, 13, 14, which I believe is basically right here, 10, 12, 13, 14, this area. And then you move up, and you get this kind of sideways stagnancy here, which I believe is what you're witnessing. This 16, 15, 16, 17, 18, 19, 20 is this right here. 15, 16, 17, 18, 19, 20, effectively. It's kind of very, very steep incline for that as well. And then you have your domed house, and then you have your three peaks, bang, bang, bang. And what does it do? It returns all the way back down to point number 10, effectively. Now, we could go a bit lower here. This could be 0.10, actually. You could make some conjecture. And this is one of the things about scale invariance, is that you're not going to get a perfect match. Like, my foot is a foot, but it's different than your foot, right? So my toes are all slightly different, right? And that's the way you should look at these. These are like looking at people's toes. Although you're looking at toes, they're going to look totally different. Or maybe, I don't know. I don't know why I picked feet, but this look kind of reminds me of feet for some reason. Giant baby toe, and then bigger toe, and then I don't know what you call your thumb toe. Okay, so what's the point of all this? I think that when you add these things together, and we look at Bitcoin, and we go, okay, fundamentally, we know we have an amazing asset here, and this is why so many people get washed out. They're like, oh my God, why did I not sell here and then try to buy back here? Because first off, that's really difficult, and it's a lot easier to buy every 6th of the month and end up with like a perfectly rounded price. And this is the thing. Most of you who are here are new to investing. You did not show up in the beginning of the bull market. You did not have all this awesome room for upside and limited room for downside. And when you change your perspective, when you show up to the market earlier, it changes everything. The downside is that most of you rush into the markets late when the risk to reward relationship is totally out of skew, and then you are confused at why taking profit doesn't seem like the smart thing. You're like, well, because I'm like, hey, don't take profit. Okay, well, why would I say that? It's really easy to watch your account go up, let's say $1 million, and then down $1 million, and go, well, I didn't take any of it out. If I had taken half of it out, I could buy twice as much more as I have now. And look, follow whatever your intuition is saying. But I can tell you that over time, if you repeat a strategy of consistency, it's going to outpace this. I'm going to get into the market, I'm going to get out of the market. If you have a handle on a good asset, you just want more of that asset. And one of the things I'm so grateful for Michael Saylor doing is he just keeps accumulating, showing what I think is the best strategy. You're like, well, I don't have as much money as Michael Saylor. It's like, well, how you think he got there? You think he got there by doing it wrong? No. So if someone's doing something right and they're repeating that process, follow that process, okay? You're not going to find some sneaky way up the mountain that's going to beat everybody when you're all climbing the same mountain. So why not climb the mountain the way the professionals climb the mountain? Seems like a sensible idea, right? Okay, so what does that mean? What does that mean, ladies and gentlemen? Well, it means, hey, Subscribe to the channel if you enjoy this content. Give us a thumbs up. We hope you're having a great day so far. I do want to go over one more thing, which is S&P 500 and the rest of the market, kind of just as a general growth standpoint. I think it's fun. I think it's important to do so. So I think we're at the bottom. We could still come a little lower. We could dip into like the $5,000 range, whatever. It doesn't matter. I'm way more interested in people's consistency in long-term investment strategies than I am in the short-term thinking, because it's almost impossible to provide value in short-term thinking other than you got lucky and randomness was in your favor. And although I love randomness and I love luck, I don't bet on them. I bet on strategies that work consistently no matter who is repeating them. And this is what I repeat to you, something that anybody can pick up, repeat with very little effort, and have great results. So I want to take a look. Yes, look at this. Beautiful rebound on Avalanche as well. I believe that was the bottom, ladies and gentlemen. Again, this is the other thing that's really bullish in my mind, is that when you see something like Avalanche, and we know how much power is here, and we know how much the big investors' money have versus how much of the asset is really available, then I think we can understand that this is still extraordinarily undervalued at the $66. So again, this is why strategy is the best. Let's say you showed up here in November and you're like, oh my God, I want to buy Avalanche. It's going to $1 million. And oh my God, I should sell here. This is where everybody picks up. You need to expand your time horizon. You need to look at what's happened in the past, and you need to walk the path of those who have walked it before successfully and follow in their footsteps. There's no need to try to do anything new and crazy. You can repeat a multi-decade-year-old pattern, which is just accumulating good assets, is a smart idea because they inevitably destroy the currencies that underlie all governments. Anyways, okay, I had one more thing I wanted to look at today, which we are going to go over. We are going to take a look at the VIX. Wow. I don't know where all the fear in the market is coming from right now. I'm sure it's from the Federal Reserve, but we are peaked out right now in terms of fear. So here's the volatility index. So there's a few other ways we can go and look at this too. We also look at the crypto and fear greed index over time. This is a great sentiment. Look, ladies and gentlemen, since December, we have been in basically peak fear mode. If you look at the multiple years of Bitcoin, like this is from February 2018, look how the time that we've spent down in fear right now is actually quite significant. Again, basically 3 months. Here's the top of the fear, the greed chart on November 9th, and we've come down basically consistently since then. We've been pushing into fear. So one of the things I found so fascinating about this fear moment is look what it's done to the supply. Now, again, if you've been a fan of the channel for quite some time, you'll know what we're looking at here, but this is Glassnode's data of the amount of Bitcoin on the open exchanges right now. And if we look at the previous two peaks, so here in the gray line above is the price of Bitcoin, and here in the orange line below is the amount of Bitcoin on the open exchanges. And here we can see we pushed a lot of supply out to the market. We were starting to get really bullish, and all of a sudden, out of nowhere, massive amount of supply came onto the market, and then all was chewed up. Now, what's most interesting to me here is that this is how I think CompMan likes to play the game. So currently CompMan has been accumulating, right? Bitcoin has been leaving the exchanges, boom, 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 big chunks of supply, hundreds of millions of dollars of Bitcoin that I don't have is being bought on a daily basis and moved off the open market. Yet, as the supply has been decreasing, so has the price. This is actually what I would call a bullish divergence between price and supply. And we're going to wake up one day and Bitcoin is going to move probably super fast. Again, if we take even a short level comparison here between the S&P 500 and Bitcoin, we could assume that we're on our way to like a few $100,000, $200,000-$300,000, maybe by the end of 2023. That's not far away. That's like right around the corner, right? So I think that this entire up and down cycle was designed to get rid of people. I've already heard so many retail marketers go, oh my God, we're in the bottom 50%, just not noise. Like, why didn't I sell everything and just buy back? Because that's now we know. Now they're gone. We've shaken the weak hands out. Most of the supply is gone, and we're going to go up and probably real fast after this. So I want to take a look at the dollar index. This has been really interesting. We did have a nice W in the dollar here, the DXY, and we started to create a new upcycle. This is a little strange, but I guess it's the cleanest clothes in the dirty laundry basket type situation where the US dollar is one of the few currencies out of the world that you want to hold on to. Now, I've lived in Costa Rica for about 10 years, and since I moved here, 50% of the purchasing power of the Costa Rican colone has disappeared. And that's an extraordinarily high percentage. So a lot of people are going to the US dollar instead of their native fiat, broken, government destroyed, tyrannical bullshit money, which is not money, it's currency. And it's not even currency, it's fucking paper garbage. But if you can hypnotize enough people into believing that something's fake, you can actually convince a large amount of them just in unison that same bullshit is real. There's some great scientific experiments although you'll have like 10 people in line, and the first 7 are all people who are part of the experiment, and they will tell you, say, have 2 squiggly lines, and one is clearly longer than the other. If enough people before the person in front of you says that they're the exact same length, you're going to say the same thing, because your intuitive motion is actually to follow social proof, not to stand out from the crowd. But it's those of you that can stand out from the crowd and go, no, I think that the other 7 people in front of me who were clearly spouting bullshit were wrong. And that's really where the US dollar is enough people believe the dumb lies that the Federal Reserve has been putting out for years, and like, hey, this is actually a valuable currency because people accept it. And this is what mass hallucination looks like. You know, we've, as a society, mass hallucinate value and culture across time frames. It's really hard to imagine. So the dollar has been in this long-term decline because they've been doing nothing but printing it. And this is the fundamental, right? This is one of the fundamentals. So don't have a ton of data, but here's the dollar from 1968. And we've been in pretty much a declining channel since. So what's important about this? Well, a lot of people look at Bitcoin as kind of a hedge to the dollar or a hedge to inflation. And really, it's just a better version of money, in my opinion. It's better than wire transfers in orders of magnitude. But because they're destroying the dollar, we want to keep a close eye on it. The dollar has the potential to rebound and actually get some strength here because of the failing Turkish lira, the failing Costa Rican colone, the failing multiple other currencies around the world that have just been absolutely destroyed by their government. So as we see pressure in the dollar, other assets start to weaken because people think that the dollar is more than a liability, and it's not. And we've gone over this many, many times before too. So there's a few more things I want to take a look at. We'll go back to the S&P 500, and then we will finish. We'll finish on the total market. So again, here's the whole time frame of the S&P 500. There's that green range we were looking at. Just for fun, we can even compare the M2, which we've talked about so many times. So here we have this orange line. This is the monetary supply. This is the amount of dollars printed since the Federal Reserve has started printing dollars. And as you can see, there is a direct correlation to the amount of dollars printed and the price of assets. And there's really nothing other than that. That is why these things are the way they are. They keep printing money and assets keep going up. This is how inflation works, right? This is what you see in the S&P 500 is only inflation. That's it. There's no new value, technically speaking. Now, we could make an argument about that, I'm sure, on an entirely different philosophical level, but take a look at the S&P 500. The S&P 500 has been falling through some of its support ranges. And let's get rid of the monetary supply here. Okay, so here we go. So we've been falling through ranges. The S&P 500 is currently popping around at why is that in a percent value still? Let's get rid of the just get rid of it. There we go. At 433 points. So this is the S&P 500 trust. So it should be around 4,300 points. But look at this dramatic fall. And then also look at the absorption start to take place. This massive blue candle, or this massive blue supply signature. We are seeing absorption, but a massive amount of weakness. So on January 2nd, the Federal Reserve came out and said, look, we have $9 trillion in assets on our balance sheet. We suck at our jobs. You know, inflation is actually obviously occurring because it's only always been occurring. Like I just showed you in the S&P 500, like literally everything is where it is because of inflation and nothing else. I don't know how they get away with this, but nonetheless, This huge move downwards is just from that, just from them going, hey, we're going to tighten, we're going to increase rates, and we've got so much supply on our balance sheet, we want to start to sell some of it by March. And that we've seen a 9% correction in the stock market because of that. So a big part of the question is, do we keep going lower? Well, yes, there is. We can go lower. Yes, we can go lower for sure for all of these assets. Again, this is why I suspect that Bitcoin could touch around 24,000 before it wicks back up. But again, look at the supply signature here. You see a massive amount of accumulation all of a sudden. Now, I don't know who has enough money to buy that many assets, but whoever they are, they have a lot. You're talking, this is hundreds and hundreds of millions of dollars of assets in a supply that we haven't seen a supply signature this high since the pandemic started, when everyone got super scared. Here's the pandemic starting on the far left-hand side and all the supply signature. And boom, this is the first time we've seen a supply signature even close to this come in since the previous accumulation range. So what does this mean? Well, one of the most important parts, I think, is to look at a lot of this stuff as noise. Over the long term, this is what's going to happen. The government is going to run into an area where they realize that they can't taper. They can't liquidate their balance sheets because they could literally destroy the entire market overnight. And to keep everybody happy, they're probably going to start having to print again. And as a matter of fact, they've actually still been printing. They said they were going to keep printing and keep accumulating till March. So this sell-off is nothing but speculation about people thinking what the Fed is going to do in March. In fucking March, which is still another month and a half, over 2 months away, basically, right? So I think it's really important to remember that when we're going through a lot of the technical charts, the technicals and the price movements are the things that are designed to get rid of the average investor, confusing them about the difference in price instead of understanding the difference in value. Now, again, on a day-to-day basis, where you are with your own portfolio and your wealth management and the growth of that and your understanding of the markets, it varies dramatically. But one of the simplest things you can do is ignore that noise and focus on long-term strategies. Now, again, Bitcoin is a great asset. There are tons of other really fun assets in this sector, like Avalanche or Solana. And we're big fans of these, but understand that those are like venture capital. We could come back 2 years from now and they could be worth nothing. Ant shares is a great example. If you go back to our video in 2017, we were buying Ant shares at pennies. And then it went up to $12 and I sold most of it. And it came back down, it rebranded to Neo, and it's never once recovered to those highs. Now you could say, well, if I kept holding on to that, I would have nothing. This is a great point. Venture capital can fail totally. You're going to want to readdress the market. You're going to want to take profits. But over the long term, that noise gets washed out by a proper investment strategy and picking assets that do well. This is why we consistently go back to Bitcoin as that primary investment leader, is because you want something that you can rely on. When I first started buying Bitcoin at like $90 and a few $100, there was no reliability that we would get to the $10,000 mark. And once we did, and now that we've gone even higher, I think the level of security that you can have about the potential of this asset continuing is significantly higher. Whereas Ethereum, in my opinion, could still become nothing but a broken NFT chain in the future. And maybe that's all Ethereum does in the future, is it's just for NFTs. I don't know. Okay, I want to take a quick look through the rest of the markets. We'll just cycle through some things. Boom. Nice top coming down, looking for a bottom on Solana, although the trading range is back down here near $42. We could see a wick this low. We'll be keeping an eye on that for Solana. But again, remember where we were when we started telling people that I thought buying Solana was a good idea. We're down like $2 or $3. I'm way fucking back here at this green accumulation channel. So if you're thinking to yourself like, oh my God, I'm late to the market. Like, how I make money? Like, what should I do? Should I get in? Should I get out? It's like, well, you should slow the hell down and realize what you did wrong in the first place, is that you were not here for the majority of the starting of the market. What happened here? Okay, let's see if I just switch charts. Maybe it'll fix that. Okay, we'll go back. Yeah. Okay. No, it still did it. Okay. Well, let's go on to the next. Okay, let's take a look at FTT. So this is, we just want to get a general market assessment from here on out. So again, look at these massive spikes. Seeing lots of depression in the market right now. Again, but look where we were when we started. We were at $3 FTT, right? So this is important to remember, is that had you been executing this strategy throughout 2017, 2018, 2019, 2020, you would have done amazingly. So don't let the bull market kind of throw you off for a ride, fuck up your strategy because you think the volatility is what you need to be getting in and getting out of, and really just enjoy that ride. Because again, when you look at something like this, a chart like this, and you realize that it basically becomes a blip, that what we're in today might not even be noticeable in the future, is so valuable. You know, it's really hard when you're like, oh my God, Bitcoin went up to $20,000 and I should have sold it when it went back, before it went down to 3. And if I had done that, I could have bought more when it was at 3. But the best, the players who do the most in this industry on a very high average are people that know how to just invest and accumulate assets over a 5 to 10 year time frame. That's it. I mean, I could get, oh my God, if you do this, you do here, you buy that, you sell this. Oh my God, you're going to make so much money because I sell you Bybit affiliate links. Like, oh my God, the majority of the people that are on YouTubers, like, don't listen to YouTubers first and foremost for investment advice. I know I'm on YouTube right now telling you not to listen to me about investment advice, which is a clear and steady point. You're going to be better off reading books. You're going to be better off investing in strategies of people that have made billions of dollars and done it by being successful. You know, again, you can see a lot of people who've made a lot of money, but they've done it by luck, and they're lying to you about how they got there. If I have a few $1 million or tens of millions of dollars from selling you BS, yet it always surprises me about like coaches, like life coaches, like, oh, I'm a life coach. It's like, do you have your shit? This guy says, I remember a guy promoting XRP going to $589. This is ridiculous. I never once said that. I've been a big proponent of actually not liking XRP, J Constant, so you are full of shit. I don't think you remember anything. And for that, I'm kicking you off the channel. Okay, we'll take a look at a few guys' thoughts and questions. Thank you for joining us today. I hope you enjoyed all that. Give us a thumbs up if you like this content. Probably a little bit more room for downside, but it's very limited in compared to the room for the upside based off what we already know. Also, if you didn't know, the reason why you make so many mistakes as an early investor is a sickness, and it comes from over-emotional trading and a lack of education. And one of the best ways to fix those problems is to surround yourself by like-minded people who are working on those questions on a daily basis. So if you want to, go down below to www.arcanebearer.com/private and sign up for the private newsletter. If you want to try it and you're unsure about spending the money, it's risk-free. If you sign up and you don't like your first month, we'll give you a refund because we don't need your money. We'd be happier that you were happy with the growth that you're getting. We are usually and almost always the first at the table. If you go back multiple times, some of the only podcasts about Matic in 2017, 2018, hey, where are they? On my channel. Now, it's one of the weird things about being right and being early is you're not usually super popular for telling people that the world is round when they think it's flat. Okay, so whatever. We'll deal with that at another day. I try to focus on video games now because it's less contentious than scientific conversation. Oh, he was reading. Oh, well, I didn't ban him too. Let's see. I remember this guy promoting. Okay. J Constant, I apologize. I misunderstood. You were totally right. Someone reiterated this for me here. He was talking about YouTubers in general. Yeah. If someone tells you on YouTube they think Bitcoin's or XRP is going to $589, like just ignore that. Yeah. And like I said, you can probably ignore almost all YouTubers effectively, but they're great for understanding like a diary and going back through time and understanding how each person got to where they are. I think YouTube is one of my favorite content platforms because of that. You just get this really unique aggregate of people and their life story. Casey Neistat is probably one of my favorite, being able to watch him develop as a human and go through all of his trials, his tribulations, his ups and his downs. I think that's one of the most important aspects. I don't go to Casey Neistat to like get investment advice, and I don't go to YouTube to get investment advice. I go to YouTube to get an understanding of where people are as individuals. And I think that this has actually generally been the better top indicator as well. So thank you all for joining us. Now I kind of went on a little rant there. I'm going to go to the dentist, get these teeth cleaned. I don't know if they can be a little more whiter, I think. I appreciate all your guys' support. It means a lot to me. Nice. Carrie Greenwood says, I was on your stream in 2017 during the Ant and Neo run-up with long-haired T.O. Oh, that was such a... That's such a sweet time. I was such a young little naive boy during that. That was great. Dow opened up 400 points down. Bitcoin is up. Yeah, this is largely a supply conversation. The S&P 500 getting hammered. Bitcoin still controlling that $36,000 area. Beautiful to see. So I'm very, very excited about all that. Let's see. I appreciate all your guys' support. That's about it. We'll do another live stream tonight, so I can spend more time with you guys chatting. I just wanted to kind of go over that. Hopefully that was valuable. I have no idea. Hopefully it makes sense. People always, you people are so awesome. All 7 something billion of you, minus the psychopath, murder, cat killers. I don't like you guys, but everybody else who's generally just nice-hearted, you're awesome. I hope you have a great day. We'll see you on the next episode. Oh wait, hold on. I gotta click this. I gotta click. Oh, Jay Constant says, hold on. I want to continue this conversation with Jay Constant because I feel silly now. It says, I was not reiterating. It was Arcane Bear. No, it's not. You're so stupid. I fucking said I don't like XRP since 2017. So you're just making shit up, Jay Constant. Okay, that's it. That's it. I guess the world's full of people that don't know how to listen either. That's great. That's fantastic. We're off to a great start, ladies and gentlemen. This is going to go really well for everybody. Boom.